if you feel like you can multitask, please read while I'm speaking. Okay, or like, yeah, just try read what's on the slides so that when I explain myself, I don't confuse you guys. Okay, because I feel like sometimes you may just be hearing my voice instead of actually reading and interpreting for yourself, and then you end up being confused. Okay? Right. The purpose of financial reports, we learned about financial statements. That is very much correct. General purpose financial reports or general purpose financial reporting. Please, can you ensure that you understand the magnitude of that theory? But essentially, what general purpose financial reports are essentially our financial statements. Now, I just want to check. Right. Um, let's see. Okay, sorry guys. Sir, there's been a message that the accounting 100 class has been cancelled. Yes, you are in the right session. So what is happening is that actually was not supposed to be written in the group. That was done without my knowledge. But essentially, accounting 100 and accounting 1A, for now, because I'm doing the conceptual framework and it's very closely linked, the accounting 100 students can actually be in this class. But there will be a topic where I will request you guys to leave, right? Because you guys are now going to do it under the accounting 100 stream. Okay. So please just tell on the group. I don't have access to the group. I don't want to get distracted. Just tell everyone under that message, just say, guys, he said you can join just for today. Okay. And then tomorrow, when you guys get into the application of financial elements, right? Your financial elements, we will go down there just now. When you get there, accounting 100 now becomes different to accounting 1A. Just a few things though, right? In the way they ask you the question. So I don't want the accounting 100 students to learn the application from me because I would then be misleading you guys. All right? Yes, I wanted to ask, could someone please unmute themselves or type in the box, right? What are the three financial statements that we have been talking about this whole week? All right. While you guys are listing that, I'm going to continue. Okay. Whoever's hand up is raised, yes, in Daba, you may unmute your mic if you raised your hand to answer. If not, you can just type it in the chat box.
Afternoon, sir.
Afternoon. How are you, sir?
I'm good, and you?
Good. Would you like to answer?
Yeah, you said three elements, right?
No, the three statements under the heading General Purpose Financial Reports.
Okay, we have SFP.
Yes. Which stands for?
Statement of Financial Position.
Yes. And then what else do we have?
We have P or L.
Yes. And what does that stand for?
Statement of Profit or Loss.
Lovely, sir. You're on a roll. What's the last one?
SCE.
What does that stand for, sir?
Statement of Change in Equity.
That is lovely. Guys, please give him a round of applause along with everyone who was typing in the chat box. I saw every single one of your answers. Do not worry. I saw every single one of your answers. Clap hands for yourselves. You guys are ready. When that conceptual framework is being taught in class, I want to, please, I'm begging you guys, raise your hand and answer questions. All right? Don't tell them how you know. Just tell them that you know. All right. Okay, now what else have we learned about this week? What else have we learned about this week? General purpose financial reports. The purpose is to provide information to users, yes, about financial position, financial performance, and cash flow. Perfect. Wow, perfect. I do not want to mispronounce your name, but you know exactly who you are. That is a perfect answer, as according to the notes. What else have we learned? Yes, reporting entity, reporting period, and reporting date. Accrual basis of accounting, going concern or going on concern. Yes. Qualitative characteristics of useful information. Beautiful, guys. I'm so glad that you guys are actually picking up the work. Please, can I see a million round of applause from you guys? Clapping for each other, clap for yourself, clap for your fellow first year friends. You guys are doing great. Okay. What else did we learn about preparation of financial statements? That is correct. Um, right. Okay, perfect, guys. No, that is actually essentially the main summary. Okay, now let's get into business. So as you can see, I made the notes a bit neater. So hopefully, as I was speaking, you were actually reading along. Okay. Obviously, we have the history and development of accounting. I hope you all have the accounting textbook. Although they will not ask you any questions about the history, it's just useful that you know it for yourself. All right? Then we went on to the IASB. If you don't know it by now, do not worry. Please go read through the conceptual framework. I do not want to spend any more time on what's it called, the earlier parts of the content. All right? We want to start getting into the application. Okay. So now we've got the conceptual framework. I've written BPU under the heading conceptual framework, right? Because the purpose of the conceptual framework, it assists the B, the P, and the U. The B is the board, which is the IASB. As you can see there, it is highlighted in yellow and in brackets. Okay, so the conceptual framework assists the board. All right, the conceptual framework also assists the preparers. Okay, right? Preparers are usually preparers of financial statements. In a sense, you could say it would be your accountants, right? They need to ensure that previous financial statements are accurate in order for them to present updated financial statements using IFRS, all right, to keep and develop consistent accounting policies, okay? And then it also assists all parties, these parties known as the users of financial statements. We then also acknowledged that as great as the conceptual framework is, it is not a standard. All right? Accounting standards have their own definition. Okay? Someone said, please zoom. Can you see it better now, guys? Or should I zoom in some more? Okay? Okay, I see a bunch of thumbs up. All right? More. Someone said more. Okay? Right. Let me not overwhelm you. I hope this is good enough. All right, lovely. So then we came to the consensus that the conceptual framework is great. It helps all of these people. It helps the BPU, right? Board preparers, users. It does all sorts of wonderful things in terms of accounting, right? It assists the board in creating the accounting principles that allow our financial statements accuracy to be top notch. It's almighty, but it does not override a standard, and it is not a standard. Okay? As I've said before, if there is a choice between a standard and the conceptual framework, Hade, conceptual framework comes second. Okay? And not only does conceptual framework come second, the IASB can decide, I don't need you anymore. And they can draft a new or revised framework. Okay? Great. Next, general purpose financial reporting. Someone already texted what this is about in the chat box, and you guys have the slides, so I'm going to move past it. Essentially, what I told you in a nutshell, general purpose financial reporting is the information we tend to see in our statements. And I'm going to show you an extract of the statement of financial position for today. I think I will show you all of the statements, but I'm not going to go too much into depth because it's still the beginning and I don't want to confuse you. Okay, who are the users? We mentioned the users earlier on. All right, let me pause. Manelisa, your hand is raised. You may unmute, or was that a mistake? Okay, I'm going to keep speaking. You can decide to unmute if you wanted to speak. Okay, Kia Betwe, would you like to speak? Hi, how are you? I'm good, and you? Good, thank you. What is the issue? What would you like to ask? Can you please go a little bit slower? Move a little bit slower. Yeah, like speak a little bit slower. Okay, please just text in the box. I couldn't hear you. Your audio is low. All right. But from what I heard, you said move slower. Okay.
Yes.
Okay, okay. Guys, in regards to that, do not worry. The videos are available. Text me after class for a recap so that you can actually watch the videos where we discussed this in depth, because I'm recording this lesson as well, and I do not want to be repeating what I've been repeating in 2 or 3 plus videos. I'm kind of just brushing through the conceptual framework because I did request that you guys read through it before the next class. But don't worry, just message me after class so that I can arrange access for you to receive the previous videos. This video is mainly for us to get into application and actually more expanding on our work. Okay, I do understand many may be confused because you might have only joined today or you came yesterday but did not come on Monday and Tuesday. I understand all of that. That is why we have videos. Okay, is that okay? Okay, I hope that is fine. Okay, cool. So we did speak about the users, right? When we mentioned BPU, and these are the users that typically make use of our general purpose financial reports. Okay, then as I go down, just take a minute to read these, a few of the users. As I scroll down, we have our financial statements. Okay, right. So, as I've said before, when we are journalizing, guys, it is very important that the element present in our transactions and in our events include, right? You need to include these abbreviations. Okay, so if I buy machinery, this is my favorite example, right? If I buy machinery, okay, we are going to say debit machinery. All right, why are we debiting machinery? Because machinery is an asset. That is the element it is. It is an asset. And assets increase on the debit side. Okay? If this is confusing, don't stress. There is a visual representation at the bottom of these slides. We are getting there. All right? I'm just trying to paint a picture before we actually get there. Okay? Right. So now, when you write debit machinery, next to machinery, you need to write SFP. Why? Why do I need to write SFP when I debit machinery? Because I want to show that machinery, my machine, this machine, right? The transaction is going to be included in the statement of financial position. Okay? Because assets, liabilities, and equity go into the statement of financial position. All right? And then you need to understand that when there is a transaction or event, okay, when there is a transaction or event, there are always two accounts that are going to be affected. Okay? So, for the purchase of machinery, all right, for the purchase of machinery, we're going to debit the machinery because we are increasing our assets, right? Machine is an asset. And then we are going to credit bank, right? We will credit bank. That is if we buy the machinery for cash, right? That is when we'll credit bank. If we buy it on credit, right, we have a completely different recognition. But let me not go too far ahead. Let me stay with the basics. Okay? Just assume that we bought this machine with cold hard cash. Okay? We will debit machinery and credit bank. Why is bank being credited? Okay, because bank is an asset and assets decrease on the credit side. All right? Does that make sense to everyone? Please just show me thumbs up. I just want to see if the majority is understanding. Okay, a few of you still don't understand. It's okay. Okay, one person doesn't understand so far. Okay, don't worry. Two people don't understand. Everyone else is getting it. Please, guys, throw thumbs up and reactions. I need a general average because we're about to get to the visual representation. I feel that when you actually see it, you will understand. Okay, Aleta, you have raised your hand. I am not sure if it is because you are agreeing that you understand or if you would like to speak. So if you'd like to speak, please do so now. Okay. Tsehofatso asked, what is the standard for now? For now, don't worry. The accounting standards, right? Essentially, when we're doing different topics, you will get a keyword. It's more prominent in second year accounting. So you will see that if we're doing said topic, right? We can say this topic is called IAS 1, for example, and then it will be International Accounting Standard 1. Okay, that is all you need to know about standards for now, right? Is the statement of profit or loss the income statement? That is correct, right? You used to call it the income statement in high school. But now that you are in first year at UJ, you will have to call it the statement of profit or loss. Okay. Someone said because it is an asset. So I'm assuming you are answering the question. What is it called? I'm assuming you are answering while I was speaking. Tsehofatso, your hand is raised. You may ask your question.
Good evening, sir. I just wanted to find out when you were making the example about the machinery that it would go under SFP because I'm thinking, but it's an expense. So like we're buying it, it's going to be an asset, but it's also an expense. Is it possible to, if I'm correct though, is it possible to list a transaction under more than one financial statement?
Okay, wait, rephrase your question. So you're saying you would want to write bank and then write profit or loss because you feel that this is an expense.
Yeah.
Okay, no. Listen, that is a very good question, by the way. Very good question. When you start learning about the statements, you will start to understand that certain things will not be seen as an expense because of what the business entails. Like, what is the business doing? So, if we have a business that offers transport, you will not list a how do I call it? An Uber vehicle. Let's say a Toyota Corolla. If I am Uber, I offer transport as a service. All right. So if I buy a car for my business, I will not call that an expense, right? Because that money is providing me with an asset. So my assets will increase. All right. We have different lists of expenses when we start looking at our statements. Okay, there's certain principles or elements that fall under expense specifically. Does that make sense? This is I'm trying to make it as simple as possible.
Yeah, it makes sense.
Okay, right. So let me hopefully when I present the statements, it will make a bit more sense. Okay, but as I was saying, what was I saying? I even forgot. Yo, sorry guys. We're saying assets, liabilities, equity. Okay, I was talking about the statement of financial position. There's a question in the chat. So, if we are selling, if we are selling machinery, do we debit bank and what do we credit? That all depends. All right, that all depends. That's why I didn't want you guys to think too far ahead. It depends on whether is our company a machinery selling company, right? So if we specifically sell machinery, we would then have to do a revenue and cost of sales transaction. Okay. But if we're not selling, right, if we don't sell machinery and we just decided to get rid of this machinery, then we would debit bank, right, increase bank and decrease the machinery asset because we no longer have it. But there's a special clause, right? If we sell machinery for a living, then revenue and cost of sales will be affected. Okay, I will try present now a journal entry that deals with the likes of that. But yes, what you are asking is correct. You would credit machinery, right? Machinery is the asset that is no longer yours, and assets decrease on the credit side. Okay, does that answer your question, Slungile? Okay, guys. So I hope that I do not confuse you guys too much. Please do not get like too concerned with the specifics because they're going to be unraveled bit by bit. Do you understand? But I'm glad you guys are asking questions and you guys are asking very good questions, might I add. Okay. And then there's the statement of profit or loss, right? Deals with your incomes and your expenses at the most, that's the most simple way to explain it, but there's a lot more to it. Statement of changes in equity, capital, drawings. Then we also have items like retained earnings, so on and so forth. Okay. Notes to the financial statement. I hope that I have enough time to show you what the notes look like, right? But once again, I told you the notes will be specifying if I list my machinery as 10 million, my notes are going to identify exactly why that machinery is listed as 10 million, also accounting for aspects such as depreciation. Okay? Right, we came to reporting entity, period, and date. Reporting entity is always the entity that is in question. So it is the entity that is presented to you. They could say, in my case, they can say Focus Academy, Pty Ltd, runs a tutoring service, right? The reporting entity is Focus Academy. If we prepare our financial statements, for now, guys, please, simplest way to explain. Reporting period is going to be a year for you guys, right? Most cases. I hope they don't throw any curveballs or special cases, but the reporting period is the year in which all the what's called accounting elements were accounted for, all the transactions and events, they all happened in the reporting period, which is usually 12 months. All right. If they tell you that the month ended on 30 June, you need to make sure you find out when did that month begin. Okay, it usually starts to become very important when you are dealing with depreciation. Because if you buy machinery during the year, you cannot depreciate the machine for the full year, right? You will be given a formula, you will be given all of those things. But if you buy the machinery in the fifth month of a reporting year, you will actually have to account for the 5 months of depreciation. All right. But that is just a little touch. We're not there yet. We're still far from that. Is everyone still with me? Okay. That's good. Qualitative characteristics of useful financial information. Okay? So, for GPFR, what is GPFR? General Purpose Financial Reporting. Okay? For that reporting to be useful, we spoke about usefulness. When it comes to the qualitative characteristics, right? They need to be present in order to make financial information useful. If they are not present, forget about it. All right? So for financial reporting to be useful, the information needs to have the following qualitative characteristics. There's fundamental qualitative characteristics, very important. Fundamental qualitative characteristics must always be present for financial information to be useful. Always, right? Enhancing qualitative characteristics, okay? They don't always have to be there. That's why they are called enhancing, okay? And as I've said, enhancing, why? Because of VCAT. Okay, for the gents that weren't there, all of us feel good when we get a haircut. it enhances us. All right? Please do remember that when you're studying. Once again, the videos on this are there. I'm not going to dabble too deep into it. And also, the slides have been sent. If not, you will private message me after class. All right. Okay. Now we came on to going concern and accrual basis. Going concern in a nutshell, right? There's a good example that I want to make use of. Okay, I was actually watching YouTube videos on accounting to see how I can be a better tutor. But what they were saying is a going concern, the tutor that was presenting was saying, right? Most of our relationships in the 21st century are not a going concern. Why not? Because they do not go on for the foreseeable future. Here, there is no future, my sister. You get me? So, going concern basically means that we create our general purpose financial reports, right, on the assumption that the reporting entity is a going concern, meaning that this entity has the intention, all right, has the intention to operate for the foreseeable future. Does that make sense, guys? I'm not going to add any more spice. Is that perfect? And then if you're not a going concern, right, it means that you do not have an intention to operate in the foreseeable future, maybe because you have not paid off all your debts. All right? All right, thank you for the feedback. Thank you, Renelwe. Thank you, everyone who threw thumbs up. All right, let's get going. The accrual basis of accounting. So before yesterday's class ended, there was a conflicting question in the chat box about this, but I didn't get to read it because the call time was up. Okay? So if you are in this class today, please do mention what your query is by raising your hand or typing in the chat box. Okay? But for me to explain this in the simplest way possible, all right? Me as an accountant, right? For my entity, let's say my entity is a tuck shop. Let's say I have a spaza shop. I sell go slows, I sell stylos, Coca-Cola, flavored water, all of those things, right? The accrual basis of accounting says that you need to record transactions or events when they happen, even if the money for them has not yet been given or received. Does that make sense, people? That is what the accrual basis of accounting says. We don't just record transactions or events when they happen. Okay, someone said please repeat. Okay, someone said it's like a matching principle. Yes, matching principle, but matching principle to what? Okay, let me repeat. Accrual basis, right? Let me use another example. If I go to the shop, if I go to Pick and Pay now and I buy a bottle of water, né? Let's say there is an accountant who writes down every transaction and event that happens. Okay, I buy a bottle of water, I take out my 10 Rand note, I give it to the cashier, right? The accountant is going to write that we got income because we sold a bottle of water, right? And there's cash, right? I've given cash. In this case, I have given them a 10 Rand note, ne? And the accountant is writing, okay, 10 Rand note was given, bottle of water was sold. That is a transaction being recorded. Ne? Now, I go to Pick and Pay again for the same bottle of water. But this time I tell them, guys, I will pay you in 20 days. The accountant is still going to record that a bottle of water has left the entity. They are going to record that sale. Okay? Does that make sense, guys? I hope that makes sense. Okay, perfect. There's someone in the chat box. They said accrued expenses and income. Exactly, guys. That's what I was trying to actually mention to you guys, accrued expenses and accrued income is exactly that. All right. If I pay for rent this year, now let's say it's December and I want to live in res next year. If I pay for 2 months of rent at that res, right? That means that is an accrued expense, okay? Because I have paid for a service or I've paid for my lease. Excuse me. Let me see. No, no, it's an expense, but accrued income is in. Okay, wait, guys, wait. Marlon, I think please unmute yourself, right? So that you may explain what you're trying to say. Okay? Because
Oh no.
accrued income is essentially we do a service for you, but you have not paid. Yes. Isn't it a prepaid expense? Yes, prepaid and accrued is exactly the same thing, guys.
Yeah,
You
she
are
wrote
going to
there.
record it. You're going to record it as a prepaid expense. And by virtue of you recording it, right, as it says, they are recorded. This is all about recording. By virtue of you writing prepaid expense, you are following the accrual basis of accounting. Okay. Does that make sense? Does that make sense? And also, for Marlon, if you were to journalize it, right, you would actually write rental expense, right? You would debit that because expenses increase on the asset side. Then you would credit, right, prepaid rental expense, which is an asset to you because you have paid 2 months of rent, but you have not lived at that place. Does that make sense? Marlon. Yeah, I was speaking to Marlon. There's someone who had unmuted. Please do speak. So prepaid and a prepaid expense. No. Prepaid. Someone said, is a prepaid expense and accrued income the same? They fall under the accrual basis of accounting, but they are not the same transaction. Can you hear the English I'm using here, guys? That is where people may lose marks. So both of them fall under the accrual basis of accounting because we record them even if there is no exchange of money or exchange of service. Do you understand? Someone said I was shocked. Okay, I was shocked. No. They're not the same thing. So prepaid and payable are under it. Essentially, yes, because a payable, right? I'm taking this machine and I still owe you. And I have to write that in my books. That is the accrual basis of accounting. Yes. Does that make sense, guys? Please don't confuse them. Don't think accrued expense means prepaid income. No. We are not there yet. I'm just trying to make you understand what we are doing if we follow the accrual basis of accounting. Okay, we will get to these topics. Please, prepaid expense is an expense you paid in advance. Yes. Okay, guys, listen, guys, wait. Deferred income. Some of you guys may be using high school terminology. Okay? If it is an expense, right? It is a payable. If it is an expense, it is a payable. And when it is income, it is receivable. Yes, that is when we are working with credit, which we will get to. Okay? Guys, I feel like me expanding on this topic is now confusing you because the accurate slides to actually show you the differences aren't there. So let's just stick to what is on the screen right now. Okay? But everything I have said, I have not misled you. All right? It is a bit confusing, yes. Let us get to that topic, guys. Right? I can see a lot of you guys have experience in accounting, right? And it's going to kind of confuse those who don't because I'm trying to give you a basic general idea for now. All right? No. You see, this is why I didn't want to get too far. Someone said yes, but will you have to debit the payable and credit the receivable? No, you will not. Just give me a second. Let's just cut this off now. We will get to receivables. We will get to payables. Ne? All I want you to understand is accrual basis of accounting means that we record, ne? We record our transactions and events when they happen, right? We don't need to see cash flow. We just need to record as soon as it happens. All right. Can we move as long as okay, being recorded? Yes. So Stella said, as long as the object leaves the store, okay, and that is being recorded by the. All right. I'm a bit confused with the wording, but I'm going to try and interpret what you're saying. As long as the object leaves the store and being recorded, that is the accrual basis because there is no money involved. Yes, record your transactions when they happen, not necessarily when we get the money. Let's just stay with that definition, guys. Let's just end it there. When we start expanding, guys, trust me, right? Trust me. Okay. Transactions and events. Exactly what I was telling you guys about. Transactions and events, okay, are essentially what happens for us to record. All right. So a transaction could be me buying an apple. How does that affect our books? And then in an event is someone stealing stock. How does that affect our books? Okay. These transactions and events will be most specified in journal entries. All right. Let me see the recording of these. Okay, I don't think I finished off my idea here, so I'm going to delete this part. Okay, here is a visual representation of how journals are presented. Please, guys, when you start writing your papers, you will need to follow this exact format. Okay, as you can see, we will do this question properly, right? I just have to try my best to make you guys understand the background of journals. You will need to write the date that the transaction happened. So usually a question will say, on 1 September, right? Focus Academy bought machinery for 40,000 Rand. If it's cash, they will tell you it's cash, or they'll just say they bought it for 40,000 Rand. If it's on credit, they usually specify that it was bought on credit. Okay? Machinery, I write machinery and I'm debiting it. All right? Why am I debiting my machinery? Because my asset has increased. Bank, SFP, again, you write the abbreviation. Where does bank belong? Where am I going to present it? At the end, I'm going to present it in the SFP. Okay? Great stuff. If we purchase inventories, same thing. Inventories are assets that are yet to be sold. Inventories are essentially what our business is made up of. If we sell cars and the transaction says 10 new vehicles were purchased, we will know that that is our inventory because we sell cars. All right? Let's see. This is a receivable and bad debts question. Essentially, what had happened is they said Mr. Williams can pay half now and half later. Yeah? The total that Mr. Williams is supposed to pay is 290K. They said he can pay half now and half later. So bank, right? Bank, we received 145,000. That's why bank is debited, right? Because we're selling this car to Mr. Williams and we said pay half now and pay half later. So the half that he paid is bank, right? On the debit side, right? Because an asset is increasing, money is coming in. Then we also debit receivable, Mr. William, for the other half that he owes us, right? Great. And then we record the full revenue, guys, as 290,000. Okay? And there is something called narrations. When you do your journal entries, you have to write narrations. And the narration is basically what happened for us to record these transactions. And what is the narration over here, guys? We are recording the full revenue on the accrual basis of accounting. We are recording the full 290,000, even though he has only paid 145,000. And then we wrote down that he owes us a further 145,000, right? And a receivable is an asset. Why? Because it's money that is owed to you. You may not have it on you, but the day it comes, right, it will be an asset. And when the day comes as well, guys, you will have to record that it is changing from a receivable to changing actually from a receivable to bank. And what you would do in that case, you would uh, you would you would debit bank, right, to show that the money has come in, and credit receivable because you have to decrease the receivable account to state that I got this money, so I no longer have the receivable as my asset. Okay, I'm gonna stop there. Does that all make sense? Okay, I'm glad that majority understands. I know it may be a bit confusing. Those who throw thumbs down like Tsehofato, please private message me so that I can deal with your disputes. All right. Someone has their hand up. Unmute. Yes, you may speak.
Sir,
Yes.
what does the PL stand for?
Profit or loss, which stands for the statement of profit or loss. So bad debts are part of the profit or loss statements. That's why you have to write PL.
Oh, and also you mentioned that the revenue, the receivable, Mr. William Part, the 145,000 that was recorded, is the money that he still owes.
Yes. And when he owes it, we have to debit it. And then when he doesn't owe it anymore, we credit it. Because receivable is an asset.
Doesn't the bank have to go with another account that shows that like it shows the effect of the money that we have received cash instead of the money that he still owes?
No. If we don't get money, we are not recording bank. If we don't get money, right? If we don't get money, let's say if we buy something on credit, right? We say receivable and we write the amount. Okay, are you with me?
No, I get you said he paid half.
Yes. Oh, you're talking about this transaction. Yes, he paid half.
The part whereby he paid half. So
yes.
I get the bank, it doesn't have to go with another account to show the transaction.
Look at this. It is a double entry system. Can you see how the credit side equals to the debit side? This here, the debit side is equal to the credit side. That is how you know that your account is balanced.
Oh, so you're applying the accounting equation?
Yes, exactly. Yes, right here. He paid 145, he owes 145, but in total, we are recording 290,000 of revenue.
So you indicate what he paid, what he still owes, and then on the other side.
Yes. Right.
Okay.
Why did we credit 290,000? Because revenue, right? I'm going to get down to that just now, but good question. Revenue increases on the credit side. Now, you guys must understand, not everything increases on the debit side and decreases on the credit side. Some elements decrease on the debit side and increase on the credit side. Does that make sense? Okay, there's messages in the chat. Let me read the chat. Guys, please, can we have like a trillion round of applause for how well you guys are engaging in this class, asking questions, challenging my mentality. I'm starting to feel like I can't do the job anymore because you guys are just too smart with the questions. Okay, shout out to you guys. Let's see. Chat says, so the guy cannot pay off his debt. Yes, I am getting to that. Right? What is revenue? Revenue is essentially all the money that flows into the entity before any deductions are made. If I can, guys, please now, I need to make this important announcement. Please, can everyone here, for the next class, understand the conceptual framework fully? Because, guys, Too many people are coming without understanding it, and it's actually bringing us back. We didn't even get to the point of today's class. Okay, because I'm happy with the questions that you're asking now, because this is the first time we are looking at the journal entry in depth. We looked at it briefly on Tuesday, but now we're actually getting deep and tense. Like, I want to start giving you guys valuable work. Do you understand? Theory you can always learn alone. So do not over prioritize it. Not that it's not important, but you can always read theory alone and cram. Nah? Sharp. Yo, I can even see people are teaching each other in the chat box. Hey, you guys are doing the most. Okay, let's see. But he has a receivable of 290,000. No. If you guys would like, you can lift your hand to answer the question with your voice, because reading kind of makes it difficult, right? Because I'm not too sure where you're coming from with the question. Why did we credit 290,000? Because revenue increases on the credit side. Okay. And the debit side and the credit side must always balance. This is not the first time you're going to see two elements being mentioned, right? There'll be a time where when we're doing VAT, we're gonna start doing VAT. VAT input and VAT output will now cause there to be at least three elements in a question. When you are doing a sale of inventory, there will be five elements that are going to be affected. Okay. Yeah, Betsy, your hand is up. You may ask.
Sir, is revenue the same as sales?
Yes. Revenue is the same as sales, the same as income. Okay? Is that good?
Yes.
Yes. Someone said click. Credit, liabilities, income, capital. Yes, there's something called dead click, right? It is an abbreviation that helps you understand what increases on the debit side, what decreases on the credit side, and vice versa. Okay? So is the receivable an expense? No, it's not, right? No, it is not. Obviously, I do not have the question open, right? So please listen, let me explain this scenario. The Mr. Williams, right, bought a car from us. We are the entity, right? The reason why he's a bad debt is because the question speaks on bad debt. That's why I did not want you guys to look too deep. Go with my voice so that when I get to each line item, I explain where it's coming from. Do you see? I was still explaining this top part. That's why I have not mentioned the bottom. Okay. We sold Mr. William a car, so he gave us 145,000 cash. The other 145,000 he owes us, right? That is money entitled to us. It is an asset. That's why it is also debited. Okay, let me see how much time I have left here. I only have 4 minutes. Okay, Patricia, ask your question. Okay, I see that there is no question. Let me continue very quickly, right? So, receivable, Mr. Williams, he paid half, he owes half. Receivables increase on the debit side because it is an asset. This 145,000 belongs to us. Do you understand? Now, there are special cases in life where people maybe pass on or they become insolvent, meaning that they don't have enough money. So, this is what happened here. Okay? Mr. Williams said, hey guys, I can't give you the other 145K because I'm broke. For example, I will make sure that we do this example at some point in the future so that you know where everything is coming from. So what do we do in that case? We have to increase our bad debts expense, right? Companies always need to have a bad debt, or actually, no, it's called an allowance for credit losses account, meaning there is a certain amount of money a company has to allocate to the possibility that they may sell things on credit and then the person can't pay them back. Does that make sense? Thumbs up fast. Yeah, provision for bad debts also, yes. Okay, those who say it doesn't make sense, chat box, we'll talk. I think, guys, do you think we should have a morning class tomorrow? Or do you guys have busy weekends? I think I'll post a poll on the group. so that we can maybe do a double session. Because the problem is, I'm trying to teach you guys the basics, but you guys are moving far ahead. So it means I may need more time with you guys. Yeah, we'll do a double. Okay, someone said double. Are you guys down? Can we have a discussion on this in the group? Yes. Anyone, someone start the discussion and let's throw ideas. Okay? But basically, with the okay, you know what? Let's save this part for the double class. I wanted you guys to actually see my colorful notes. We were actually supposed to start here today. I was supposed to show you that, hey, this is how it works. Don't forget, we present our debit transactions and events on the left side of our journals. As you can see here, debit side is the left side. Okay. When you're doing your general ledger, you will see that as well. And so we record them on the left side, then our credit transactions on the right side. Then here are all your elements and where they increase and decrease. Okay. The lesson's gonna end now, guys. Guys, those who didn't do accounting in high school, don't worry, you'll be fine. The lesson's gonna end. Guys, thank you for joining. Let's discuss what the course of action will be for tomorrow. I appreciate every single one of you guys and for you guys challenging me with good questions. I will be seeing you all tomorrow, hopefully. If you didn't do accounting in high school, skawara, it's not over. You felt so lost, text me. It's fine, I'll help you. Don't stress. Okay, double session. I think double session is the way, guys, so that I can actually explain properly. Other than that, goodbye.